Let's move now to the streets of London, where Juliana Olayinka is standing by to bring us this morning's major market headlines. Good morning, Juliana. Well, the government there seems to be giving a listening ear to concerns that up to 1 million companies could fold because they could be denied emergency loans, as Business Secretary Alok Sharma has issued a stark warning to banks. But is there a measure to enforce this?
Good morning, Bissy. Well, there isn't a measure as of yet, but we are expecting Chancellor Rishi Sunak to deliver a statement in the next couple of hours, because this has become a huge issue, and any developing nation knows that small to medium-sized businesses are the engine of any economy, and they have been suffering ever since a couple of weeks ago. The Treasury announced that they would be delivering a series of loans and grants to small businesses to keep their staff employed and to keep their business ticking over whilst the world goes through this global pandemic. But alas, that's not been happening. Yesterday, as you said, the Business Secretary, Alok Sharma, he hosted the daily government briefing on the coronavirus, and he did take that opportunity to deliver this stark warning to banks, urging them to start giving out these loans, and basically as a repayment to what the taxpayers did for them 10 years ago during the financial crisis. This week, it has been reported that up to 1 million UK businesses will go out of business because they've failed to get this consolidated coronavirus business loan, up to £5 million from banks. At the moment, several banks are shut. Some banks are charging higher than usual interest rates on these loans, and some people just are unable to tick the boxes. So yes, Alok Sharma yesterday did deliver that stark warning, and we are expecting a further briefing from the Chancellor later today, perhaps with some sort of legislation.
While we await that briefing, or the outcome of that briefing now, the Department for Work and Pension says that nearly 1 million people have applied for universal credit benefits in the past fortnight as the coronavirus pandemic has worsened. What would this mean for the government?
Well, what this means is that the coronavirus grip is really tightening its belt on the British economy. And this is one of the reasons why the government are doing their very best to urge banks to lend to businesses so staff don't go unemployed. The Universal Credit Scheme in the UK is a welfare system that is all-encompassing. So it provides housing rent, it provides job seekers allowance and all other benefits. Typically about 100,000 people a week sign up to this, but of course, as you said, considering we're going through this huge pandemic at the moment, 1 million people have applied, and a lot of people are really struggling because the phone lines are completely overwhelmed. Some people are saying they have to wait up to 6 hours on the phone just to get through to an advisor. The government have said that they will be putting in an extra £9 billion to top up the system, but it's a huge issue, and the problem is with something like universal credit, you don't necessarily get the money when you need it. It does take a couple of weeks. So opposition parties, particularly the Labour Party, are urging the government to kind of rip out some of that red tape and bureaucracy and get cash fast to the people who need it most.
It's certainly very challenging time for many companies now, and British Airways says it's expected to announce that it will suspend around 36,000 staff. Why is this happening?
Well, it's happening because the aviation industry is suffering because more than 100 countries have closed down their borders because of the coronavirus pandemic. British Airways have always said that they would be grounding their fleet. We saw them do it last week when London City Airport shut its doors. And then just yesterday, they announced that they would no longer be serving Gatwick Airport, London's second largest airport. And now this announcement comes, and between 32 and 36,000 of their staff will be put on the government's furlough scheme. That furlough scheme guarantees 80% of your wages, up to £2,500 a month. Now, the difficulty that British Airways will face is that British Airways is a heavily unionised airline. It isn't like some of the more budget airlines like Ryanair and EasyJet. They deal extensively with unions, which is why we saw last year them really suffer when they were trying to negotiate pay. And a lot of the unions are not happy with this 80% furlough scheme. They want more money for their employers. And of course, 32,000 is a huge amount of people to try and pay. And that's predicted to be about 80% of the workforce. So at the moment, BA are still in tough negotiations with the union. Nothing has been confirmed as of yet, but they did release a statement saying that they're hoping to rely upon that 80% furlough scheme that the government is offering.
Many thanks, Juliana, for those updates. And please remember to always stay safe. We'll see you at 1:30. And back here at the debt and currencies markets now, let's bring in a fixed income dealer at Access Bank, Akpewe Opuchu. Good morning. Well, let's begin this conversation with the outcome of the primary market auction of yesterday, where a 95 billion naira was offered. What were the rates like, higher or lower?
Okay, good morning. We actually saw the stock rate coming out lower at the just concluded primary market auction. We saw the 91 days closing at 2.2% from the previous auction at 2.30%. The 182-day closed at 3.2 basis points, 3.2% from 3.4, which was the last 182-day stock rate. And the 1 year declining by 30 basis points to close at 4.3% from the previous 4.6%. Although we saw the subscription outweigh the amount on offer. So we actually saw 111 billion subscription as against the 68 billion which the DMO actually offered. So we still see more demand for the NTB bills, even though the rates are actually declining. We see limited investment opportunities out there. So we still see demand at this primary market space.
But there's some OMO majorities of about 200 billion naira today. What segment of the markets are dealers looking to reinvest proceeds afterwards?
Okay, so thank you very much. There's 117 billion OMO maturity today, and we expect that the CBN might conduct an OMO auction. Although we see the rates at the secondary market trading higher than what the last stop rate was at OMO auction, we see rates trending up as high as 13.8% levels. And since the restriction sometime in October, where individuals and corporates were restricted from investing in OMO maturities, we just see this play out now. Banks are the ones who are actually trading in this space. So we see them reinvesting the funds at this higher yield. If there's an OMO auction conducted by the Apex Bank today, we expect to see little subscription on that or no sale if the rates at the auction still remain at those 13% levels, because the banks can actually get this OMO maturities at a higher yield in the secondary market right now.
We understand that volume of transactions at the INE window yesterday was down by around 70% compared to the previous session. Is the lockdown taking a toll on that side of the market?
Yes, we can conclusively say that, because we saw a decline in transaction as against Tuesday, where we had a turnover of about 54.6 billion. We actually now see like 25.8 million in the market. And we can attribute that to the lockdown that has happened, especially in Lagos State right now. So we see low volume of transactions now in the INE space currently.
Fixed income dealer at Access Bank, Akpewe Opuchu, thanks for speaking with us this morning. And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.